Hey guys, thanks for tuning in to this individual share analysis update. This is obviously current and warranted up until trading the 7th of April 2014. That of course is Monday's trading session. So what I'll do for you is just to address really the theme of the market and how that works out to many of our top 12 individual shares that we trade and set up over the weekend in our Pivot Point Pro trader analysis course. So what we can say about the markets is that the markets are really undecided in the overall direction which they want to move. We're very, very close to that bullish breakout on the Dow Jones Industrial Average above 16,665. But if we transition that through to the Nasdaq, you can start to see a lot of bearish Morobozu candlesticks occurring at that multi-year high. You can see that what could have been a double top, we've essentially retested that old neckline and we're starting to fail, which of course translates to many of the technology shares which we address in our Pivot Point Pro weekend course. So what this means anyway, if we go through some of these individual share analyses, we're really at a point in time anyway where we need to sort of wait and see and wait for better trade confirmation before we start jumping into either calls or puts or buying long or selling short these individual shares. As you can see, Apple earnings is coming up. We're moving sideways. Two triggers, 552 and 507.63. Until these get met or until earnings approaches, we're not trading Apple. It's really in sort of a precarious sort of situation and price point at the moment. Amazon again, 327.60 was our entry, trading down to 318 and 310. If you're not in it, do not force the trade. We'll probably come down to support down here. It'll give you another good opportunity to exit out of those put contracts and just wait for earnings to obviously come and go and then trade the ensuing gap. AXP looks to be breaking down below 88.78. Very interesting. 86.50 is my ultimate target. That is one of two shares which is set up ready to trade this week, and the third which you should be in is Starbucks. We'll get to that in a moment, but for now, Baidu again at a support level. You can see the support level right here, about $152 I believe. Yeah, $152 a share right across here. Sorry for my line drawing, it's absolutely horrible, but you can see we've got a lot of buying wicks below. You can see here 3, 4, we've got 4 little wicks here telling us that this whole level in here is really good buying pressure for Baidu. So I wouldn't be forcing a trade down here about 145. I'd be holding it to about 139.57 on the bearish side, 168.37 on the bullish side. Let's move on to Caterpillar. Caterpillar has broken out really nicely. It's trading up here about $102.17 a share. You had 2 days to exit out of this share bullishly. Reset the trade up at 105.96. No bearish entry on Caterpillar this week. FAS looks to be setting up either a head and shoulders terminal chart reversal pattern or what we call a triple top. Either way you want to look at it, it's bearish, so we need to find out what's the best location to place our bearish trigger. That of course is 86.27. I'm not going to go through the steps to trade analysis. That's something you need to learn, come through the course. It's more or less free, so just sign up and register and you'll get access to it for free. Google again breaking down below 550. I do believe that was 1,100 midweek, but we did have some form of a share split or something along those lines. Maybe a redistribution of shares, increasing the outstanding number of shares or doubling the shares outstanding with half the market price. It all makes sense. I'm not entirely sure, but that's just my 2 cents. Anyway, Google looks to be moving lower. We do have earnings though, and we're fast approaching a support level at 539. So please pay attention to that support level. Do not force the trade. HD looks to be breaking down below 78.25. All right, very close, or it could pop out of this descending triangle at $80.87 a share. It doesn't bother me which direction this wants to move. Couldn't care less. But we do have the trade set up. We've got our targets in orange. We've got a fully fledged trade plan. Now we're just waiting for price to confirm. JPM earnings is very, very close. Exit out of these core positions, which you would have been entered into at 60.44 for a small loss. Just get rid of it. Say it was a bad trade, mitigate your risk, and then trade the ensuing gap, which is going to occur after earnings. Netflix, again, similar to JPM, it just continues to break down. I think we caught the breakdown weeks ago and we traded into this open window, and that was it for us. So we sort of missed out on this last bit of the move. That's fine. We did place a very profitable trade, but we've got earnings coming up. We're about to close the window. We're at a support level. If I change to my oscillating indicators, you can just see how oversold we are. It's incredible. This is really going back to the crash which occurred in Netflix back in 2011, I believe. Yeah, right here, 2011, during these levels here. So you can see the start of the sell-off. We did get a really nice island reversal gap in Netflix, but we didn't get that this time. But the name of the game anyway is just to be patient on Netflix. Let it set up, let it finish. And then we'll have a trade set up soon. Starbucks is one that you should have been triggered into as of Friday or as of the previous week, either at 73.23 bearish or 72.52 bearish. It doesn't matter which trigger you're in, it is profitable, and we're trading down to support here, about $70.06 a share. Earnings again is coming up. Don't force the trade if you're not in it. Just wait till you hit your target and then reset the trade up bidirectionally. To finish with, we've got XOM. XOM has got a bearish rest after battle pattern, which isn't good. So here we mitigated our risk to 45 cents, which is really, really good when you look at some of the profits we've been making in other shares. So please just tighten your stop. Again, earnings is coming up. We're getting into earnings season, so it is a very busy period of time when we look at the markets, and just during earnings season, it becomes very volatile. So it's ideally not the time that you want to be placing swing trades. So all the best, everyone. Thanks for watching this market or individual market update or individual trade analysis update. If you want to learn how to do this for yourself, have a look at our free scholarship initiative at our website, pivotpoint-trading.com. All the best, everyone. Goodbye.